After unanimous passage in the Senate and a 403-12 passage in the House of Representatives, President Obama signed H.R. 3548 into law on November 6th. The bill extends and expands a key tax credit for homebuyers while also offering more help for those out of work. The $8,000 credit for first-time homebuyers continues. This tax break is now extended until May 1st of 2010. If you have never owned a home or haven't owned a home in the previous 3 years, you are considered a first-time buyer, and therefore you're eligible for the credit. Remember, it's a credit of up to $8,000. You must sign your purchase agreement before May 1st of 2010 and close the transaction before July 1st of 2010 to qualify for this tax break. There's now also a $6,500 tax break for move-up buyers. Okay, maybe you aren't a first-time buyer. You may still qualify for this new real estate credit. Have you lived in your current home for more than 5 consecutive years? Well, you may be eligible for a credit of up to $6,500 if you move out of that home and buy another. Again, you'll have to sign your purchase agreement before May 1st and close before July 1st to get the tax break. Now, this is worth noting. BusinessWeek.com contacted Senator Chris Dodd's office, the Connecticut lawmaker chairs the Senate Banking Committee, and received word that move-up buyers can qualify for this $6,500 credit even if they signed a purchase contract prior to November 6th, provided the purchase closes before July 1st. So will everyone qualify for these credits? Not quite. They'll phase out for individuals with adjusted gross incomes of more than $125,000 a year and couples with an AGI of more than $225,000 a year. The old phase-outs respectively kicked in at $75,000 and $150,000. These higher phase-outs mean that the credit can now help an additional segment of the housing market. And no, you can't buy a vacation home and claim one of these credits. They'll only apply to principal residences. In fact, the home you buy has to have a sale price of $800,000 or lower. So what will this do for the economy? Well, on November 5th, Senator Dodd said, "Every economist will tell you we have to steady the housing market before the economy will turn around, and we can't afford to let this tax credit expire now." Respected Moody's.com economist Mark Zandi agrees, saying that from a macroeconomic perspective, nothing is more important than stabilizing housing values. Zandi thinks that the $8,000 credit has led to 400,000 additional home sales in 2009. On the other hand, Dean Baker, the co-director of the Center for Economic Policy and Research, questions why the extension is necessary and said, for the most part, you're just giving people money for something they would have done otherwise. The Joint Committee on Taxation estimates that extending these credits into 2010 will cost $10.8 billion across the next decade. There's also an extension of unemployment benefits. H.R. 3548, sponsored by Representative James McDermott, a Democrat from the state of Washington, additionally extends state jobless benefits by up to 20 weeks. This will happen as a result of another extension, an extension of the federal unemployment tax on employers until June 30th of 2011. If you are one of the nearly 2 million Americans whose jobless benefits are set to run out at the end of 2009, this extension will help you. Your benefits will last at least another 14 weeks into the new year. In fact, they'll last for another 20 weeks if you live in a state where the unemployment rate exceeds 8.5%. Have your unemployment checks already stopped? You may reapply for benefits. And finally, there's also a chance for companies to convert losses into cash. Really? There's one provision of the new legislation that many have overlooked. It widens the window of time on the net operating loss carryback. It lets all businesses apply losses from either 2009 or 2008 to any 5 years prior to 2008. So business owners, by virtue of the new legislation, have the potential for an IRS refund on the taxes they paid for the 5 years prior to 2008. Now, there are 2 asterisks here. 1, refunds for taxes in the 5th year of the carryback shrink by 50%. And 2, any business that received TARP funds cannot take advantage of this break. If you have any questions or want more information, please contact me by email, Debbie@soundfinancialpartners.com, or by phone at 206-749-5111. Thank you.